Hello my fellow freedom builders and welcome back to the channel. Today I am gonna tell you a bit more about this smart money, dumb money concept that I talked about yesterday when I made a video about the Robin Track and Robin Hood brokerage, where we could see a lot of the dumb money we're putting their money into. Now, I got some comments about this smart money, dumb money concept, and even though I mentioned it in the video yesterday, I can hear that some people are getting a bit mad at me because I'm talking about dumb money, because they have the feeling that I'm thinking of them. And yes, I might be, so I think I'll elaborate a bit on the concept today, because it has nothing to do with the dumb money being dumb, meaning that they are not clever. It is simply a way to describe a certain segment in the investment world. So today we're gonna look at who they are, these dumb money. We're gonna look at why they actually have outperformed the market and the big funds this year in 2020. And then we're going to look a bit at how we can actually be a part of the smart money, or at least try to make some money by following the dumb money when they are right. So that'll be at the end of the video today. Now, before I go any further, remember to subscribe to the video and like it. And in the weekend here, in the upcoming weekend, I'll actually make a couple of videos with some good follow the dumb money stocks that you can see. So remember to hit that bell notification down there if you will make sure that you get my videos up as soon as they're coming. All right, let's have a look at the dumb money. Now, I can hear from the people that are getting a bit annoyed with me when I talk about the dumb money, that what they think I'm talking about is that they are something like these two characters here. If you haven't seen the movie, go and see it. If you also get tempted to see the sequel, then stay away. Number one is fantastic. Dumb and Dumber with Jim Carrey here. That is amazing. All right, but it has nothing to do with being dumb. That is not what I'm talking about. What I am talking about is that the dumb money, the people that are putting their money into the stuff that dumb money do, they are either less educated, they have less information, or they get their information slower. So let's say, for instance, the less educated. It could be sometimes in a Facebook group, I see someone commenting saying, I don't understand, this stock is going down 5% today. What happened? And then someone answers, well, they paid out dividend today, so of course that is 5%, so the stock goes down 5%. So people simply don't understand what they are putting money into. Or it could be some special vehicle, it could be a REIT where they don't understand how it's structured. It could be that they are starting to invest in options. A lot of the users of Robinhood is actually investing in options, even though they haven't got the slightest clue as to how they work. So all of a sudden they find themselves in an option position where they, for instance, don't know what time decay is. They don't understand the option Greeks, so they don't know that theta is time decay, and that time decay accelerates, and all of a sudden they're sitting on a losing trade because they don't know how options are losing value over time. Or it could be they don't understand the Vega part, which is implied volatility. So they don't understand that when they're trying to sell a naked put on a stock, and they're getting a huge price put into their account for that, they don't understand that a high sales premium on an option means that the implied volatility is high, meaning there's a lot of risk in this investment. So all of this being less educated, and that is why I'm making this channel. So I hope I can give you some concepts here so you are being more educated at least. Now, less information. Of course, there is information out there that we don't get as retail traders and investors. Or there maybe the information is available, but it is insanely expensive to subscribe to. Now, I have, I don't know, 30, 40 different subscriptions, both because I'm investing a lot of my own money and because I have my subscription service where I'm trying to give as good a service as possible there. So there's simply some information. Maybe it is out there, but it is so expensive to get that a normal investor with $50,000 or $10,000 or $100,000, it's simply no value to put $15,000 per year in getting a certain piece of information. So some of the information we don't get, And then of course some of it is just slower, meaning that I think all investors have tried this. We open our television one night, or we are looking at the news on the internet, and we see some breaking news like this: Apple's record fourth quarter, and we are thinking, oh my, I am missing a good deal here. The famous FOMO, the fear of missing out. And we rush to our Robinhood broker, or whomever we are using as a broker, and we are buying some Apple shares because we are thinking that now when they are coming out with a record fourth quarter, the stock must definitely go up. Well, the thing is that all of us retail traders, all of us dumb money, we probably have gotten this information slower than the pros. So when I start to buy Apple stocks, you have to remember that I'm buying it from someone, and the one selling it could probably be one of the very smart money funds that are sitting out there that got this information a while before it came on the breaking news. And they actually bought Apple stocks because they knew that as soon as this story hits the breaking news, then all the dumb money is rushing in, and we can sit here and sell it out to them for a profit. So just remember that you and I, we are probably never the first to get the information. It doesn't mean that you cannot invest on a given piece of information. You just have to consider that someone smarter than you, meaning with a lot more information and a lot quicker information, they have gotten the information before you, and they are probably selling the stock to you right now. So then when we look at the news, I see stories like this: Robinhood traders nailed the market bottom. Debunking theory, retail investors are the dumb money. Well, does it now? Well, it is true that the so-called Robinhood traders, and of course it's not just the one investing and trading from Robinhood, but the Robinhood trader is just kind of a term so everybody knows what we are talking about here. So CNBC here, I actually think they usually have some very decent articles, but this article is completely bogus. Robinhood traders nail the market bottom, debunking theory that retail investors are the dumb money. So what they analyze here is that the time from February, March, when this virus crisis came, and up until now, the retail traders have made a ton of money there, and that means that they are not the dumb money. That is completely wrong. It is true that many retail traders have beaten the big funds here. We can also read here on Bloomberg, dumb money beats smart picking, big winners in stocks this year. All right, so the dumb money are apparently all of a sudden the smart money. Or are they? Well, what we have to remember first of all, that article like this is pure clickbait. Because when I'm looking at the S&P 500 here, let's just have a look at the weekly chart. Here, every single bar is a week. Now what we can see here is that it is true that the retail traders that came in here, they have made a killing. And I got in my first Danish investments. I got out of the market around here, and I started to buy here at the end of March. My subscribers in Denmark, in the Danish subscription area, they can vouch for this, that I started buying stocks up at the end of March. So that was because I had a strategy and I followed it, and I was looking at where are the money running right now. They were running into the market, so therefore we bought. Now, it is a bit early, in my opinion, to start to say that this scenario proves that the dumb money are smarter than the smart money, or debunking the theory of that. I also saw an article in the Danish financial news the other day, in Børsen, it is called, where there was an article saying exactly the same, that this timing the market was completely not effective, because the best thing was buying when there was a lot of value. And I simply had to reply to the author and saying, you cannot say this at the current time. This is the same, if we just scroll back in time here, this is the same here in 2008. You can see here, we had a big drop, some of you might recall it. We had this big drop, and then the price shot up again. And it is the same as saying that the people getting in here thinking this is the bottom, and then saying, yes, I am a fantastic, I'm better than the funds, I'm better than the smart money because I bought here right at the right time, and then a few months in this upturn here, we are declaring ourselves winners, we are better than the smart money. Well, nobody knows what is going to happen. And trying to say that the theory of the dumb money is debunked 6 months into this crisis is simply absolutely nonsense. Because what we could see, nobody knows if we are going to see it, but we could see 6 months more or 12 month more of this, and then the so-called geniuses here would have to sit on their hands for how long? 6-7 years before they were back and break even. So coming out and saying this, that now it is debunked, that is simply the most ridiculous thing I have ever read. So that is just to say that this is there are a lot of breaking news and headlines about this right now, because that the Robinhood traders here from the Robin track I showed in the video yesterday, they're pouring into stocks, and it is a lemming effect where when they start to pour in, then everybody follows, and yeah, you know the drill, then everything goes up. But there is no free lunch on Wall Street. There probably aren't anywhere, but there are definitely not any free lunch on Wall Street. And what we have to realize is that the only reason why the stock market is going up, maybe not the only, but one of the important factors here, let's just have a look at that. I'm sitting with some money and I want to invest it. I can put my money in some sort of risk-free investment where I'm getting a risk-free interest, which at the moment right now is extremely low. In Denmark, where I live, it is actually a negative interest, so I have to pay money to the bank for them to hold my money. That is a bit crazy. And that will probably come to the United States as well, but it is so in several countries in Europe right now. So we have risk-free interest. Now, the second you get more in interest, more in yield than a risk-free interest, that means that you're taking on some extra risk. That's how it is. All right, so we could put them into the stock market. The stock market gives us a higher yield, but we are also taking a higher risk. Or are we? Well, right now, as you know, and now I've written Fed here, but it could also be the European Central Bank, the ECB, but the Fed is the most hard-hitting here right now. The Fed is buying up debt in a lot of companies that are on the stock exchange, meaning that it is almost impossible for these companies to go bankrupt. So what happens here is that when we put the money in the stock market right now, we are getting the higher yield, as we normally do in the stock market, but the risk has pretty much disappeared, because that Fed is printing money and buying up this debt. So everybody can say, well, we have a big black hole in our money box, we'll just issue some bonds, and the second they do that, Fed comes running in, buy up the bonds at a good price, and all of a sudden the company has liquidity again. So right now, the reason for a lot of the rise in the stock prices is that people are pouring the money into it, also because nobody wants zero or minus interest, but they're putting the money in here right now, knowing that it is virtually impossible right now, as long as Fed is buying up, it is almost impossible to lose money. Of course you can lose money, but it is almost impossible for the company at least to go bankrupt. So that is an important thing to do. And what we need to realize is that dumb money goes for higher risk. That's just how it is. That when you hear your colleague is talking about a stock called Nikola or Blink or Hertz or whatever, and saying, yeah, well, I put $10,000 into Hertz yesterday and now it is $50,000 and I sold it and I'm fixing my house and building a carport and everything else, you're thinking to yourself, oh, I want that as well. So you call your banker and he or she says, well, I recommend that you take this good old conservative investment, and you're saying, oh, no big conservative companies for me. My neighbor or my colleague, he just made a fortune. I want fortunes. Give me some hot stuff. And That is why dumb money goes for higher risk. And there are several reasons, of course. It could be that the amount they are investing are more like play money to a lot of these people. It is maybe $2,000 or $5,000 that they can afford to lose. It could also be that they simply don't understand the risk. And it could be that they he or she goes with the flow, simply running with the Robin Hood segment. It could also be that they all read the same breaking news as everybody else, that they have no risk management, and that they have no rules or fixed strategy. Meaning that if they're sitting on $5,000 and they were rational, conservative investors, they might put $500 into a Nikola stock or $200 into a Nikola stock and then put the rest into some more conservative. But oh no, we want to make money, don't care about the risk, so we are pouring our money into all of these. Imagine Hertz that went bankrupt and still went up, 500 or 1,000%, simply because it was play money. Nobody understood it. We go with the flow, breaking news, no risk management, and a lot of people have lost a ton of money on that. So be careful out there believing that this hypothesis about the dumb money has been disproven now. As they write here on CNBC, that has been debunked. It has not. But it is true that the dumb money has been lucky, some of them good. Actually, there is an article here from Fortune where Goldman Sachs is speculating about this, and they're saying, well, some of the dumb money are actually in a better place right now because they are value investors. And when everything went down, and the companies were still making money, well, then they got in at a very good time, at a very good price. So therefore, they were not as dumb as normal dumb money. But they are also telling us about all of these crazy so-called investments in, for instance, Hertz and several other companies that were completely ludicrous, but because the dumb money was just making money. Also remember that when you're talking to your cousin or your colleague or your neighbor and they're telling you about the $10,000 they just made on Hertz, they might also have been losing at least $10,000 on other stocks, but they simply don't tell you about it. People have a tendency of only telling about the success trades, and therefore you can go and have a picture in your head of everybody making money in this market, and believe me, they don't. So what we have to realize here, and this will be the end of it, I will make it quick today, is that the good Seth Klarman here said, it is easy to confuse genius with a bull market. I think another one said that everybody is a genius in a bull market. And that means that when we are looking at a stock market going like this, let's just have a look at the recent stock market here. Everybody are looking at stock market going like this, straight up, then you should have been extremely unlucky to find something to lose money on. So therefore, when you're talking to people and they're telling you how easy it is in the stock market and everybody can do it, it is simply a lie. Because yes, everybody has been able to do it since the end of March here. That first of all, they're not telling you about the big losses they took here in the beginning of the year. And secondly, nobody knows what is coming next. It could be that we go up 2% and then down 30. It could also be that we see 2 years going like this. And these choppy markets are often the worst for many investors because it starts to go up and they're saying, yes, a new bull market. And then they're going in here and it turns down and they're saying, oh no, this investment business is not for me. But then it turns up again and they're saying, yes, now I want to get in on the bull market. And it turns down and they're losing money again. And they can do that several times. If you were in the market in 2015, you know what I'm talking about because that was the kind of market we saw there. Almost impossible for most investors, unless of course you're just buy and hold investor, then this is a perfect market because it is not really going anywhere. So just remember that don't be sucked into what I call the Jesus syndrome. And that is a syndrome where you think you can walk on water. Well, right now you might, but it could also be that it's just because the lake you're trying to walk on is actually frozen. So right now we are getting into the summer period, the ice is melting and you are getting your feet wet pretty soon. And that will come, mark my words. Another good old quote is from the good old Warren Buffett here. Only when the tide goes out do you discover who has been swimming naked. So when it all of a sudden stops, and it will. I don't know if it will be on Monday or if it will be in 3 years, but it stops. Then we can see who were investing without strategy, without risk management. Right now, it is hard to tell dumb money from smart money, but when the tide goes out, when the water lowers, we will see who were the dumb money and who were the smart. Now, I actually hate to make a video like this because I feel like this grumpy old man sitting here saying, be cautious of the risk and remember the old time, and when I was young we had real bear markets. Yeah, well, they will come again. And in my opinion, you're not a real investor until you have seen 1 or 2, maybe even 3 huge crashes in the market, because that is when you start to learn yourself and your psychology and your mental state. It is all too easy right now, and it is so easy. I have to remind myself every day that the reason I'm making money right now is only partially because I'm good or that I have a good strategy. It is to a big part simply because I'm lucky. And the time will, the market will turn at some time, and that is where my strategy and my knowledge and my experience has to set in. Right now, I really don't need any of it. I just have to ride with the flow. But be aware that at some time the flow stops, and it will. And that is where we can see who actually had a good solid strategy and who were just a part of the dumb money. All right, I guess that's it for now. This was a little Friday rant, and I hope it didn't get you in too bad of a mood. Maybe you're sitting, oh, I will never watch this channel again because he's way too negative. And I'm sorry if you get away from the channel today with that impression, because normally I'm actually quite a jolly guy, but I just needed to tell you this because the hype is going crazy right now, and I am afraid that a lot of people at some time will burn their fingers and lose a lot of their money. So I hope you'll have a nice and hot, warm weekend here, and take care of yourself and your money out there. Remember to subscribe to the channel, and I'll talk to you again soon. Bye for now.